top investors watching your money as Goldman Sachs is expecting 4 rate hikes from the Federal Reserve now. Joining me right now is Laffer Tengler Investments Chief Investment Officer Nancy Tengler, Bulltech Capital Markets Chief Strategist Kathryn Rooney Vera. Yeah, Kathryn, how do you see it? I mean, the fact that Goldman Sachs is predicting the Federal Reserve to raise interest rates 4 times this year, Kathryn, they expect March, June, September, and December, all those meetings to see a rate hike. Your thoughts on the impact?
Well, I agree with Nancy. It's probably priced into the markets. Ideally, Maria, the Fed does, in fact, do it because we have way above trend growth, double potential growth, inflation really far beyond the target, and we have, of course, the wealth effect playing into the situation. But the thing that I'm most concerned about, Maria, is policy risk, and the Fed can change on a dime. I personally doubt they do 4 times. There's even a risk they don't hike next year. You know, big banks actually, Maria, are all over the place. So Goldman is certainly the most aggressive of all of them. But the fact is that we're getting additional stimulus. So the worst thing that can probably happen right now is the federal government does another round of fiscal stimulus, which just puts additional fuel on the fire for inflation. If that happens, then we will get the Fed moving more quickly than possible. But this is a Fed that's gotten things wrong. Transitory inflation, wrong. No wage price spiral, pretty much wrong. And 3, labor market not full employment, wrong. Anecdotally, over the weekend, Maria, last week, and I heard a small business owner say Pizza Hut is now paying $20 an hour. His top guy gets paid $17 an hour. So for him to increase prices for all of his guys to match Pizza Hut, he would have to increase the products that he sells 15%. So that's a big issue, and that's the definition of wage price spiral. So we have to be aware of this. The federal government should not be putting additional stimulus into the system. Fiscal and monetary are both at full throttle, even though the Fed is tapering. So I think this is a situation where investors need to be protected. I agree with a lot of what Nancy said on the inflation front and expectation of rate hikes for this year.
Well, I think you make some really important points, but you're not sold on the idea that we're going to see all these rate hikes, it sounds like.
No, I think Omicron could scare them. If we get DeltaCon, which kind of sounds like something out of Universal Studios, this could really spook the Fed and take rate hikes off the table.
It's great advice from all of you. We so appreciate it. Thanks very much, guys. Kathryn Rooney Vera, Michael Lee. We'll see you soon.